Good morning. Welcome to the video conference of MGS Branco with reference to the results of the fourth quarter of 2024. We have with us Gustavo Lopes Teodosio, Vice President of Investments and Controllership, and Fabio Cefali, Director of New Business and Relations with Investors. We inform that this event is being recorded and that during the presentation of the company, all participants will be only listening to the video conference. Afterwards, we will begin the question and answer session for analysts and investors. The translation is available clicking on the interpretation button. For those listening to the conference in English, the original audio can be silenced clicking on mute original audio in the lower part of the screen. The transmission is also being done simultaneously on YouTube at www.youtube.irri.mds. We'd like to also clarify that any declarations that may be made during this video conference relative to the perspectives for business of MGS Branco, projections and operational goals and financial goals constitute beliefs and premises of the management of the company, as well as based on information currently available. They involve risks, uncertainties, and premises as they refer to future events and depend on circumstances which may or may not occur. Investors should understand that economic conditions of the industry and other operational factors can affect the future performance of MGS and lead to results which differ materially to those expressed here. We'd now like to pass the microphone to Gustavo, who will begin the presentation. Gustavo, please go ahead. Good morning. Thank you. Good morning to everyone. Welcome to our results call, earnings call. We count on the presence of all of you. Thank you for counting on all of your presence once again. I would like to start reinforcing the fact that at the same time that 2024 was a very challenging year, principally in relation to the macro issues, we made a series of measures to improve the company. We increased the volume and increased our margins. Listing a little bit of these actions, I think it's important to mention the consolidation of the commercial team, now under a single leadership. We have no more the division of defense and attack, and we're seeing already better dynamism between the teams with this unification, capturing synergies and negotiations with clients in a much more consolidated way. The creation of a team of commercial excellence brought us new indicators and tools to better accompany our performance. And today we know exactly what are the opportunities that we have at the point of sale and with the product mix, the number of stores, items per store, allocation of promoters, and commercial factors as well. The allocation of the team, the revenue management team, and the financial team, as well as unlocking the commercial team with the administrative team, has also improved the controls in pricing, as well as the management of the commercial budgets. The food service team, which is a giant market, was created with its own marketing strategy for trade and pricing, and is already contributing to the growth of our business in flours, margarines, and fats, as well as with the conquest of new clients. It continues as a important pillar of growth. It increases the profitability, and at this point in time, the idea is to focus on releases that are relevant. We have said internally that there are very few. We want to make few and good releases, more focused on quality than quantity. The international business are in a very good point in time. We have margins in relation to 20%, in relation to 23, as well as good news with the acquisition in Uruguay of Las Acacias, which continues to grow. We're also opening new sales channels. For example, in the US, with a business of our own brand. On other fronts, we have made important advances, which have helped us to increase the profitability. In October, you accompanied as we did a structuring, the reduction of 150 people, employees and third-party workers in different levels of the company, trying to reduce fixed costs and transferring the production of pastas from Madureira in Rio to other units. In January of this year, we've already stopped the production of cookies in the Lençóis Paulista factory in the interior of São Paulo. Beyond that, since the beginning of 2024, we closed 3 distribution centers, all of this guaranteeing um, improvements in our fixed costs and eventually in our SG&A. And as we continue in the discipline, strongly in the discipline of our cost management. In the fourth quarter of 24, as you saw, we had the return of the level of 20% in net revenue in our SG&A. This has already been executed with items that have already been executed or are underway. We are continuing confident that we're on the right route. We're continuing to be prepared and involved for the challenges of 2025. The results of the fourth quarter of 2024 improves in almost every line compared to the previous quarter. This reinforces that we're heading in the right direction, and we closed the year with a net debt of zero, which is very important at this moment of high interest rates. At the same time, as we are prepared for investments which contribute to the realization of our strategies of growth with profitability. And finally, always attentive to the needs of our stockholders, starting in April, we will pay dividends every month, 3 cents per share as an anticipation, as different from the previous policy of 6 centavos per quarter. We will now pay 9 cents, which will be an additional of 50% over the previous level. We're the only company in the sector with this practice. I'd now like to pass this over to Fabio to go into the presentation and go into more detail about our results. And in sequence, I will be back for the Q&A session. Thank you very much. Gustavo, thank you. Thank you all. It's a pleasure to be with you, to count on all of your participation in our fourth quarter call for the year of 2024. I'm going to start the presentation with the end of the introduction from Gustavo in relation to the changes that we've made to improve our policy of dividends. And it's important, I think, to share with everyone the history of this. By 2020, up until 2020, we paid 40% of the profit, of the distributable profit, in dividends or in interest on capital. Remembering that the distributable profit is the total profit without not including fiscal incentives and reserves. We maintain the same practice today in the definition of what is distributable net profit. In 2020, we increased the payout from 40 to 60% and created the quarterly payments of 5 cents per share, which is an anticipation of that amount, which are paid during that same period of time, complementing to arrive at the 60% in the following year. In 2023, it was another type of evolution. We went from 60% to 80% of the distributable payout, and we corrected this 5 cents to 6 cents per share. At this moment, we're making another structural change, which we're doing in our policy. We are maintaining the same 80% payout, but starting in April of this year, the payments will be monthly, 3 cents per share per month, which will be 9% per share per quarter, or 60% more than we paid in the previous policy. All of this since 2020 is looking at the investor in his different profiles, both institutional investors as well as individual investors, and seeks to attract and retain investors in our base with a policy of remuneration which is conducive to the balance of M. Dias and our perspective for results. Looking at the results of the quarter, and the year, the principal highlight this year, as Gustavo mentioned in his speech, in line with all of our challenges, the challenges which we faced in 2024, but also all of the evolution that we've done in our company and execution, both from the point of view, commercial point of view, as well as logistics, industrial, the back office areas as well. We've seen part of these benefits in the last quarter when compared to the results of the third quarter. So there has been an improvement in all the lines of results. The net revenue in the fourth quarter was 4% that registered in the third quarter. And remembering that historically we have a seasonality, an unfavorable seasonality from the third to fourth quarter. And at this point in time, we actually had growth in revenue of 4%. This growth in revenue came both through the growth of volume as well as a growth of average price. And the highlight of the average price from the third to fourth quarter was principally in the mix, on the product mix, which is something very important, which we're working on for the improvement of the results in the medium and long term. Our EBITDA was 55% above that registered in the third quarter, and the net revenue 42% above, and the generation of cash was 160 million reais, 160% higher than what we saw in the third quarter. The numbers for the year are here in the lower boxes. There was a retraction in revenue, a little bit of retraction in volume, but basically this retraction was due to the a fall off in average prices up until the third quarter of the year, and the volumes retracted by 2%. These are the EBITDA numbers, net profit, and the 592 of generation of cash in that period. Advancing to the chapter of market and net revenue, the first information that's important is in relation to the numbers of the market. Here, these are not numbers of MGs, these are numbers of the two principal markets in which we operate, the cookies and the pasta market. The cookie and pasta market, when we compared the fourth quarter of 23 to the fourth quarter of 24, and the full year of 23 versus 24, this market grew by in revenue of the total sales in the market in value. There was a growth in volume and sold. So Brazilians in 24 consumed 2% more in volume, measured in kilos or tons, compared to 23, and the units sold grew by 4% compared to the quarterly comparison and annual comparison. And the average price remains stable in relation to the annual comparison. It grew by 3% in the fourth quarter of 23 compared to the fourth quarter of 24. This growth of average price is related to, as a direct relation to, the increase in the cost of palm oil in dollars the same period, and also with the devaluation of the real, things that we will approach in the next image. In the pasta market, we saw growth. It grew by 1%, and in the quarterly and in annually 2%. The volumes grew by 3% in the quarter and 5% in the year. And the units sold grew by 3%, 7%, and average price fell off by 2 or 3% in both comparisons. We believe that this retraction has a direct relation with the fall off of the price of wheat in dollars, which happened over the length of 2024. And we'll be looking at this a little more closely in the rest of the presentation. Looking at the net revenue, you open it by volume and average price. Here we bring the evolution over the quarters from 2024. And as I've mentioned here, in the comparison between the third and fourth quarter, there was a growth of 4% in net revenue. And in the comparison of the fourth quarter to the fourth quarter of 23, a retraction of 10%. This retraction in the vision of the quarter year on year is related directly to the fall in volume, which we see here in the graph, in the central part of the slide. And here it's important to remember that in the fourth quarter of 23, we supplied our clients, who are retailers, for a change in the operating system, which occurred in January of 2024. We commented about this in the first quarter of 24, which was a change in our system, a successful change. We did not lose any market share, and we guaranteed the supplying of our clients. And this involved a sell-in, a sale of by MGS to the retailers, a little bit lower in the first quarter and a little bit lower in the fourth quarter, which created a base of comparison, which is a little more difficult for the volumes of the fourth quarter of 24. The average price here sequentially improved in the third quarter, principally due to the mix of 5.7 reais per kilo to 5.8 reais per kilo from the third to the fourth quarter. Here's the revenue, following what we commented on the third quarter, the new model of release of our results, where we published the net revenue in three product categories. The first, remembering, that involves the categories of cookies, pastas, and margarines. The second, which is the refining of oils, farinhas, and industrial oils. This is a relevant part, which is the food service, as Gustavo mentioned. We created an area which is 100% dedicated to this channel and to these clients. And the third group, which is called adjacencies, items which have brands Jasmine, Feed Food, Fronteira, and items of toasts, cake mixes, healthy cake mixes, sauces, and seasonings, which have an average price higher than the other categories and with potential growth which is higher. So from the third to the fourth quarter, we presented growth in net revenue in all three of these growths of these categories. The first growth in the grinding and refining of oils, and in the agencies, which grew by 5%. These are numbers we already passed. The volume grew, average price grew, and net revenue grew by 4%. Our market share, here's the market share for the year, for 2024, compared to 2023. So the consolidated for these two periods. In cookies, which is our principal category in revenue, we presented growth of 0.2% percentage points. In pasta, a small retraction of 0.1%. And flour, wheat flour, which has grown a great deal, we had growth above 1 percentage point from 23 to 24. Looking at the three principal categories of MGs, which are more than 70% of our business in terms of sales, we have gained market share in two of the three categories, and we had a small retraction in pastas. Here, we'd like to point out some of the launches, some of the releases that we've done in 2024, and with which we have expectations which are very positive for the results of these items in 2025. The first, in the category of pastas, which is a new lamen, MGS lamen, with zero unfried, with more flavor. It's less sodium. It contains vitamins and is being sold in some of our brands. The principal is the Adria brand. This is a launch which involves a great deal of capex over 2023 and 2024. We made important investments, and today is moment to supply the retailers and gain traction in these items. Piraquê, which is our second largest brand, which was acquired in 2018, a product which is the head of the Piraquê, which is goiabinha, this cookie which you see in the middle of the slide. And we last year, cookies, sabor goiabinha, with flavor goiabinha, the only one in the market. It's already available in the points of sale with a high price, an excellent product with a very good margin. In the healthy foods category, we launched a product which is unique in the market, where it's called Fit Food, which is a cookie made out of rice, alfajor de rice, bitter avelã, chocolate milk, milk chocolate, and so forth. In the two extremities, we have on the left and right, these are chocolate bars also, of the Fit Food brand, which were launched as well. There are several sweets which are not on this slide, which are also excellent products which are already available in the points of sale, not only in supermarkets but in other points of sale as well. And there's an expectation that there would be important sales of these items in other channels. In the line of healthy foods, Jasmine, which is a brand, a company which we acquired in 2022, a brand which is very relevant in the Brazilian market of granolas, uh, gluten-free products, cookies, and other items, always along the line of healthy foods. We launched these granolas in the unique portions, which also attends a different type of consumer, another moment of consumption, and the premium granolas of Jasmine, both in salty as well as sweet. And here one is based on cacao. It has a low carbohydrate corn, and these are products which converse with our strategy of sustainability. These are products which are carbon neutral by compensation. And so before going into the session of costs, EBITDA and profitability, and before getting to our cash position, it's important for us to share with everyone that this was a quarter in which we've had several extraordinary items in our results of EBITDA and our quarterly EBITDA and also our annual EBITDA numbers. We talked about this in the release, which was filed on Friday, but it's important also to give visibility and recover these concepts. So beginning with this first line of the slide, in the fourth quarter, we had items which were very favorable and several unfavorable items. The favorable items improved our results and the unfavorable reduced our results. And the balance of those two categories was 79 million of increase in results in the fourth quarter. 131 million of is made up principally by two subjects, credits related to taxes and subsidies that we received since 2024, and the return of the provision for PLR due to not reaching the goals which had been established for 2024. So these are two events which were accounted for in the fourth quarter. As unfavorable events, we also, at the end of the third quarter, we communicated that in October there was a process of restructuring involving the disconnection of 850 employees and some third-party workers. And normally, when this happens, we have expenses related to the desligamento of these people, which fell in the month of October, and this generated an impact which was unfavorable of 52 million reais. For the year, looking at the annual results of the same 52 million reais plus the stop during in January, which you communicated in the call of the first quarter, which involved a shutdown for the involved a loss of contribution margin of 60 million reais. So these were the events, extraordinary events, which happened in the quarter, and these also had an impact in the results on the annual results. Looking at the section of costs and expenses, before we go into the EBITDA, these are the three principal variables which impact our costs, our variable costs. First, wheat, which shows the evolution of the price of wheat in dollars per ton from January 23 until December of 24. The line below that shows palm oil, dollars per ton, and the third line, which is the actual exchange rate, the real to the dollar exchange rate. So what we see in wheat, which connects a little bit what we saw in that first slide, the dynamic of the cookie and pasta markets, the trigo fell in price over these months and ended the year at $223 per ton, below the 224 of December of 23. However, there was a period, especially in the second quarter, where wheat went up. As we explained in the call of the third quarter, wheat went up, we put a price on the market. The market did not accompany it, and this brought an unfavorable impact on our volumes, our sell-in, which is the sale to retailers in the third quarter. And at this moment, at the third quarter, at the end of the year, it was stable for several months and fell off a little more in the fourth quarter. Palm oil showed stability from January up until mid-March or April. And then due to climatic questions in Asia, as well as in South America, palm oil in dollars presented an increase, an important increase, but in the year, and closing the year at $1,497 per ton, a value well above the end of 23, which was $1,129 per ton. These items are negotiated in dollars, so the exchange rate also had an important, relevant effect on our costs and also our results. And this devaluation of the real begun here between April and May gradually increased also our costs until the exchange rate arrived at 6.1 reais per dollar at the end of the year. When we translate these curves into what happened, the results in terms of gross margins, we closed the quarter with 33.5% of gross margin. This amount, this percentage, has an impact on items, extraordinary items, favorable items. When we remove those items, we get to a gross margin of 30.2%. Why did it go down compared to last year? Basically due to a lower dilution of costs, fixed costs due to lower volumes from the fourth quarter of 23 to the fourth quarter of 24. In terms of variable costs, it fell a little bit at the first quarter, and afterwards went up during the year, and as palm oil and the real went down in value. And so at the other side of this equation, average price had a retraction at the beginning of the year, and due to variable costs, but then it was recovered, and we saw that the entire industry, especially at the end of the fourth quarter, following the direction of doing gradual readjustments in prices. In relation to our logistics network, this was a point in which we mentioned in the third quarter, which was one of the priorities for us. Looking at the year of 2024 and 2025, we increased in the manufacture of pastas in Madureira to other units. We moved it to other units to obtain greater operational efficiency and greater agility in the logistics and delivery of these products. All of the expenses related to this movement were accounted for in the month of October, which is also one of the extraordinary items which we mentioned. In January of 2025, we deactivated the production of cookies in the Lençóis Paulista factory in the interior of São Paulo, remanaging that production to other units. This from the standpoint of manufacturing. When we look at the logistics, which is the delivery of our items to our clients, in January of 24, we deactivated the distribution center in Belford Roxo in Rio de Janeiro, and in this January of 25, we've deactivated these 2 DCDs in Aracaju and one in São Luís, both with the focus on the optimization of the logistics network and reduction of costs. Going to the SG&A, which are expenses that are administrative and general expenses. In nominal terms, we had a total in the fourth quarter of 480 million reais. This number considers several extraordinary numbers which are favorable, which added up to 25 million reais. So even if we return this 25 million to this value, we still have 505 million reais of total SG&A in the quarter, below that which was registered in the third quarter, and well below that which was registered in the fourth quarter of 2023. So this gave us 19.3% of net revenue, and return, adding that 25 million, we would be a little bit above 20%, better than that which was presented in the first, second, and third quarters of 2024. And looking at the expenses for the year, in 2023, we had 2,223 million in expenses. In 24, we had 2,166 million in expenses. So even with inflation in that period, a large number of our line items in expenses are in a continuous process, a rigid continuous process of revisiting constantly and continuously all of our structure of expenses to be able to have a value, an expenses value below that which was registered nominally in 2023. EBITDA of the quarter counted was 335 million reais, 355 million reais. I passed over the non-recurring items, and in the accounting presentation, we got the 14.3% as an EBITDA margin, and we closed the year with 1,198 million, a margin of 12.4%. Our net revenue of 177 million reais in the quarter, better than the previous quarter, with a net margin of 7%, and the net profit of the margin was below that of the previous year, totaling 646 million reais. Going now to the chapter on cash generation, debt, and investments, we had a generation of cash both in the quarter as well as in the year, and a cash consumption of working capital in the year as well, which is evident here, looking at the three principal lines of our working capital graph: suppliers, clients, and stocks. Looking at the line of suppliers, as well as we looked at in our expenses at a lower amount of expenses, we also had a lower amount of purchases, and we finance a little bit less those suppliers in this comparison of these two periods. In the third quarter to the fourth quarter of 2024. And the line of receivables is stable, 60 days last year in the third quarter and in this year. And our stocks represented a worsening result compared to the third quarter of 23, but better compared to the third quarter of 24. The comparison with the fourth quarter is explained by the movement which we did, where we supplied our clients more in the third quarter and closed with a lower level of stocks. And the volume sold in the third quarter of 2024 were below that which we wanted. And we wound up with that quarter with a higher level of stock, which was adjusted by the end of the fourth quarter with a positive evolution of volumes sold and consequently of volumes produced. In relation to cash, in the perspective of leverage, we closed with a leveraging of practically zero in the fourth quarter, with a position of net debt of 25 million reais. And for the seventh year in a row, we have the highest rating available by Fitch Ratings, which is AAA with a stable perspective, which was reconfirmed. Our debt, our gross debt, which is basically equal to our cash on hand, was 2,390 million, and more than half of that is in long-term debt, principally starting from 2028. The investments in the year in CapEx added up to 304 million reais, below that which was registered in 2023, only 17%, and mentioning that the principal highlight were the investments for the changing of our ERP, switching over our ERP, which happened in January of 24, and a relevant part of the CapEx for this process happened during 2024 and 2022 and 2023, which is the principal reduction CapEx from 23 to 24. remembering that everyone here, our strategy, which is a strategy of growth with profitability, looking at three pillars of growth. One is an up-to-date business, looking at Brazil as one whole commercial area, but this directorate has a team which goes all the way down to the details of each point of sale, from the macro to the micro in its most in the smallest details. The other categories that we saw grew by 5% from the third to the fourth quarter in the healthy foods, snacks, and cake mixes and toasts. And international, as Gustavo mentioned, did very well in 2024 with growth in revenue, which was above 20%, and also with growth in volume. This all supported by a continuous program of productivity and efficiency, which is evident when we saw the SG&A of the fourth quarter, reminding you that the actions underway, which were defined in the third quarter for the recovery of our results, both from the standpoint of commercial standpoint as well as from the point of view of profitability and uh, profitability, the consolidation of the commercial team into one directorate, as Gustavo mentioned in his speech, the optimization of our structure, which brought some expenses, momentary expenses and non-recurring, which as we've opened, and also started to present several benefits, especially in the most recent months, the final months of 2024. The creation of the team focused totally on food service, the adjustments in the logistics network, as I've mentioned previously, the question of pastas in Madureira, the factory in Lençóis Paulista in the interior of São Paulo, and the DCs which were closed. The allocation of the management team or the management of revenue, and the vice presidency of investments and controllership, which involves principally the processes of revision of prices, price adjustments, and control of commercial budgets, as well as campaigns and other budgets. In exportations, grew by more than 20%. The consolidation of commercial excellence, as Gustavo mentioned, we have brought excellent results for our day-to-day control, allocation of our budgets, and the coordinated effort for the reduction of our SG&A. To close here, this part of the call, the chapter regarding ESG, these are our indicators, which are very detailed in the release, in the earnings release, caring for the planet, believing in people, and strengthening our alliances. And we have a new indicator, which is in relation to the movement of 100% transparency, which is also detailed in the earnings release. And to close, we want to mention here and thank to all of those, all the investors, analysts who accompany the company, other agents of the market as well, and principally our collaborators for recognition of all the hard work and dedication and all the challenge that they have given us going forward. These were some of the premiums and recognitions which we received during 2024. And with that, we will close this part of the teleconference and go over to the Q&A. Thank you. We'll start now the Q&A session for investors and analysts. If you would like to make any questions, please hit the raise hand button. If your question has been answered already, please feel free to leave the list clicking on the same button. Please wait one moment while we collect the questions. Our first question comes from Guilherme Palhares from Santander. Senor Guilherme, your microphone is open. Good morning, Gustavo and Fabio. Thank you for taking our questions. I wanted to hear from you a little about the reorganization of capacity distribution centers that you commented. You've done a lot in the fourth quarter, and I wanted to hear a little bit about what we can expect going forward in terms of fixed costs. What was the impact of these changes, all these actions on the chief? You explained that a little bit because we're seeing investments which is being made in these questions and to try and understand a little bit how you see the return on these investments. And the second question, I wanted to understand a little bit more when we look at 2025. You commented that a lot of internal adjustments. As I understand, Gustavo was speaking about having less launches, but launches that are more assertive. If you could comment a little bit on investment in marketing and at the point of sale with commercial expenses for 2025, what we can expect looking at this growth with these changes in exchange rate. And if you could speak a little bit about what you're seeing in the way of budgets for 2025 in the lines of commercial expenses. Guilherme, thank you very much for your question. Let me start with marketing. At the beginning, the idea here is to focus more on the operations in which are relevant. We saw that trying to do a lot of things all at once generates a distraction. So the prioritization is key in this process, especially in a moment, in the difficult and challenging moment which we're going through here in Brazil. The same thing that we did in our strategic plan. Fabio presented the three main pillars to grow more in Brazil, entrance into new categories, and also the step towards internationalization. We focused a great deal on organic growth in Brazil because in 2021, 2023, we were basically working on these three pillars: growth in Brazil with the attack plan, investing in new categories, whether it be through research and development, but also through acquisitions, for example, Jasmine, Latinx, Fit Foods, and Fronteira, and going into the international markets, such as the purchase of Acácias in Uruguay. So it was a total attack, which we had designed previously with several consultancies. So it's good in the sense that we're able to amplify and advance in these areas, but you also wind up not going ahead as much as you would have liked to in some of those levers, which was the case of the growth in Brazil. So the volumes were stable. And what we're trying to do now is to, through M&A and the focusing more on Brazil and our vision of where the biggest opportunities are. So we're doing this a little bit in our marketing. We spent a lot of time organizing these brands. We have a lot of brands in the company, and we visited several low-price brands. We had a lot of work. We grew a little bit. This growth of brands did not convert into higher volumes. So the same size of investment in marketing and net revenue, the company will continue to do and continue investing. However, focusing more on trade marketing from the point of sale in detriment to those budgets which are more aimed at brand construction. Not that we want to end our project of construction. We're going to be trying to focus a little more on actions aimed at the point of sale and therefore more connected to growth in volume. Looking at the brand, as you mentioned, the company is attacking all of the pillars that take us towards profitability. If we look at revenue, if we this work that's more aimed at the point of sale, marketing, commercial area, accompanying these changes, more aimed at the point of sale, and also in the revenue management, pricing, we unified these two regions, attack and defense, strengthening our negotiating power with our clients. And there's been an important change underway in the commercial areas that we are able to seek these additional volumes. While these volumes are not yet a reality, what we're doing is reorganizing the company, looking at our logistics network and our manufacturing network so that we wind up with large reserved capacity. Since the volume did not come, we're gonna change our structure. We're gonna modify our structure, not closing units, but deactivating some. But when we see that the volumes have come back, these factories will reopen. Our plan is to not close factories, but to build more factories. We have capacity for investment for this. However, the Brazilian market is stopped with growth of the GDP below 2%. So at the moment like this, we have two options: either wait for the volume to grow or seek an optimization while this doesn't change. So that's what we've done. It's the fruit of this modification of our reserve capacity to make it more adequate for the needs. This also helps in the reduction of SG&A as well as in our costs. It increases the utilization of some factories to reduce our fixed costs. We're also doing a series of activities. There's no silver bullet here, but in SG&A restructuring, as Fabio mentioned, below the closing of our DCs, we're making more investments in marketing. We're freezing openings. We're reducing expenses with trips. We have more than 30 different levers in the company. We have a team oriented towards accompanying and looking at all these levers for the control of SG&A expenses. So while the economy does not take off, we're doing our homework here at home, maintaining our costs and expenses under control. In terms of strategy, that's it. Looking forward, we perceive that the exchange rate hit us greatly in our second quarter of last year, going above 6, but during a good deal of time, it was a little bit above or below 6, but this gave a strong pressure on our costs for the entire market. So it hit us all. It's not for nothing that we've started to see in 2025 a growth of inflation picking up. Everyone has been pricing this change into their products. You can do this in the most recent readings of the IPCA. These most recent readings at the moment, we're looking at practically almost every category. So, if I'm not mistaken, Porto Alegre in the category of cookies, we had the biggest increases were in the regions in the Northeast. So we see that the companies are advancing their prices. MGS is following the same route because it's fundamental for us to protect our profitability. So there are price movements, internal organizations, bigger investments in marketing aimed at trade, control of the optimization of our DCs and manufacturing plants, and the optimization of SG&A. Putting this all together, even in a more difficult market, the company is very optimistic in relation to 2025. We don't see any spikes in results, neither in volume nor in profitability. It's a process. However, it will be a lot of hard work, but we do believe, we're not able to foresee that evolution will stop. It will be sequential, but it will continue. It should come. We saw this in the fourth quarter compared to the third quarter, and should continue in 2025. Obrigado. Just one quick follow-up. When you spoke about 850 people, we're computing these movements of 2025, or was that all in 2024? Oh, Guilherme, this is Fabio. Good morning. Just to, as you commented here and complement what Gustavo said, in values, these movements which were done in the manufacturing plants, annualizing these costs and disconsidering the values amount needed for these movements, we get close to 30 million reais of fixed costs in reductions. Looking at the question of manufacturing Madureira and Lençóis Paulista. In relation to the DCs, which were closed, we have another 10 million reais in reduction of logistic costs. So this happens starting from the moment that we no longer have these expenses for these changes. For the effect of this model, I think we said this in the past, all the work, when we look at SG&A, my internal work, independent of numbers, we have to maintain that relation of SG&A to net revenue of close to 20%. We had important growth last year. Our SG&A represented approximately 26% of our net revenue, which did not happen due to a lack of control, but happened due to a revenue in terms of prices, since net revenue fell. But when you look at in absolute numbers, the absolute, which was in 2023, and the amount of SG&A for 24, for 24, even with the inflation that we've seen, for this motive, which is why the interest rates is so high and inflation that's high, the company reduced in absolute numbers, reduced its SG&A numbers. So it's very much connected to net revenue. But even so, no matter what the scenario is, all of our efforts will be aimed at maintaining this level of close to 20% of our role. These costs of firings related to these 850 people were accounted for in 2024, in the fourth quarter of 24. They've already been included. Thank you, Fabio. Our next question comes from Gustavo Troiano from Itaú BBA. Gustavo, your microphone is open. Good morning, Gustavo, Fabio. Thank you for your questions. I just wanted to add on to this question about the gradual improvement for 2025 and try to make this relative to your competitive capacity and your capacity for pricing. You see in the first quarter, and according to the IPC, as was commented, we're seeing increases in pastas and cookies. But how do you see these price increases in the competition and in yourselves? Doing a relative analysis of how are your prices compared to the industrial overall, if there have been price increases, price list increases, and talk a little bit about this point and how has been the reaction on this line of these potential increases with competitors. This would be the first question. And the second question, talking about the efficiencies in SG&A efficiencies, looking at it from another angle. Some years we talk a lot about the multiplique problem, which is the problem of efficiency, which you delivered successfully 2 or 3 years ago. And what it seems to me, looking at this fourth quarter, is that the nominal SG&A will be as relevant as the program which we saw a few years ago, however, in one quarter. So with the same volume going up, so I wanted to understand from you, due to the cuts that were made in SG&A, where do you see any risk for the performance, the top line performance, due to the magnitude of the adjustments in such a short period of time? More to understand if you see any point which demands more attention, looking at this efficiency, this general efficiency. Those are my questions. Okay, Gustavo, thank you. Good morning. In relation to the price increases, we put, yes, a new price list by the end of last year. It went into effect in the end of January. We're doing it in a different way, which will define our strategy, but we're not publishing which channels will come first. We're doing it in a way that is more structured, and not just once, but not in all markets and not in all regions. It's very clear to us that Our clients were expecting our movement, and since it's something that's more unified, looking at this increases that were lower. So we're trying to not publish too much the strategy of pricing, but there is a new price list. We haven't had any relevant pushback from the clients. We started with the principal challenge, the most relevant channels for MDS. And we understand that the trade is understanding the motive, clearly understanding the motives of these increases due to the numbers from the end of 24 and beginning of 25 that pressure our costs. And so now we see things have calmed down a little bit, but there's still strong pressures on costs. So I would say it's going well. We haven't any relevant pushback. The changes that we've done here of SG&A are various. We're talking about factories. The effect on the top line has been zero. On the contrary, finally, we have a lot of capacity in other factories. What we've been able to do is rebalance this without any volume, without any loss of volume, with the optimization of our production lines without loss of volume. So we haven't had any impact on our top line. The other evolutions that we've seen in our vision do not generate any impact on our top line growth, especially the DCs, which were in markets that we're accompanying very closely in Maranhão, Sergipe. We're able to attend very well, even without these DCs. So we have the manufacturing plants very close to those regions. And so in our vision, all of those changes were made and discussed with our clients so that we don't have any type of loss of level of service or and that it would affect our top line. It's a process which we're constantly analyzing. It doesn't end here. And eventually, these volumes will come back and the market will improve. These DCs can return to being reactivated. So if there's any relevant impact, which was not foreseen, we're not imagining that, we can reactivate these factors. In my vision, no reduction, no cost reduction has any impact on the top line. There are 5 agencies of sales promoters for trade. We made an important bid with them. We picked up the 2 best and closed with the best, one of the 2 best. So they're getting a bigger contract on level Brazil wide. We have better bargaining power, and we've been able to make a very good negotiation with them, both for MGs as well as for the agencies. So things like this, which generated an effect and improvement of our expenses, SG&A, but in our vision, do not impact our top line because they don't generate any gap in work or investment for the commercial area. Basically, it's just renegotiation exchanges. We're very optimistic that it won't have any effect on our top line.
Ô, Gustavo, bom dia. É o Fábio aqui. Não, eu só queria
This is
fazer
Fabio. I just wanted to add one quick thing. The question of the manufacturing network and the distribution network, the investment, the heavy investments that have been in recent years in technology and systems and processes that has wound up permitting these movements which have occurred at the end of last year and the beginning of this year. As Gustavo mentioned, we closed 2 DCs, but we've been able to attend the demand through other units. There was an important evolution in the process of planning and demand, allocation of stocks in the different units, and SOP and improving the level of service. These movements will not compromise in any way our growth plan. Our next question comes from Leonardo Alencar from XP. Leonardo, your microphone is now open. Good morning, Fabio, Gustavo. Thank you for taking my question. I wanted to come back a little bit to one of the initial questions of Guilherme in relation to the question of operational efficiency, which we've discussed a great deal, or operation of the manufacturing plant. If you could comment a bit due to these adjustments, which are should be all be positive from the standpoint of productivity and efficiency, increasing volumes in a factory, closing factory Y, which was more expensive perhaps. When we put this in perspective with the dynamic of looking forward, trigo, the price of trigo has come down a little bit. Palm oil has gone up quite a bit. At the beginning, there's a lot of volatility, exchange rate volatility. However, it lowered a bit the price of the pressure on prices from the exchange rate. These new factories in these conditions, in the cost of are all these being captured? All these, or in this work against you? Do you think, for example, increasing your exposure to palm oil prices? This is all being done in the dynamic of innovations in the portfolio. If there's any lack of operational efficiency, innovation, which when we look at this in the most recent numbers, it could hurt your gross margin, but increase your EBITDA. And this might appear in your results. These 2 points. Fabio, I'm going to mention, okay? Leonardo, uh, just innovation, what we've discussed for years, something close to 150 launches. It's a lot of launches. Talk about it in all categories, in pastas, cookies, and so forth. It could be even a change in packaging, or however, there's an internal process. It's a lot of things. So a lot of these launches, we perceive that these did not go to the market as they should have. And so it was a question of execution. It's very difficult to manage 150 launches at once during 1 year. So the change in this area has a lot to do doing fewer and better launches, and with our capacity to do a good introduction of these launches in the market. Because just doing it doesn't resolve the problem. Just to increase the number of SKUs, if the execution is not well done at the point of sale, we're not going to capture this in volume or results. So we continued with these launches. The company is not doing any type of launches that does not have added value that we mentioned, better than the MGS averages, and we'll continue. The problem is we are going to try and reduce a little bit the number of launches so that this can be better. In terms of palm oil, as you mentioned, the exchange rate improved a little bit, which was unfavorable at the end of the year. Wheat, it was favorable, going up a little bit, and palm oil really has been the big offender in terms. Due to several questions. We had the limitation of exports from Indonesia, Malaysia, the principal producers, Latin America also, especially in Brazil. Colombia has pressured a bit prices, but all of these changes in DCs and factories do not impact in the level of exposure of these commodities. We continue maintaining the same policies and capacities for storage. The company did not deactivate any silo or capacity for storage of commodities. It was basically the operation which was trimmed down due to logistics or in production line in some ways. In the case of Rio for pastas, and in the case of São Paulo for cookies. So there hasn't been any impact on our commodities or in the exposure to commodities. In terms of operational efficiency that you mentioned, we have monitored very well, very closely, all of the indicators of services, TIFs, to guarantee that these changes have not generated any type of trauma on our clients. We've seen that this migration has been done in a way that was very, very soft, with no impact on our lines of attend. Hi, this is Fabio. The 30 million, talking about what Gustavo was talking, and the 30 million that I commented earlier is directly related to labor costs, energy costs, and has no relation to the variable costs in terms of commodities. Where wheat, cacao, palm oil, sugar, and or exchange rates. These are amounts, these are gains that are expected and to be annualized, which does not depend at all on the volatility of commodity prices, whether they go up or down. Very well. So just one quick follow-up on the palm oil question. Due to the capacity for arbitrage with margarine, you have a restriction when you think about these segments of cookies. When you think about 2025, with a higher level of palm oil due to exchange rates and other uh, items such as in Asia, as well as other factors that are mitigating, which has pressure on your costs. This is the account of parity. We do this every day. We have capacity even also to use cotton oil, cottonseed oil, and palm oil. We are constantly making these calculations to see which commodity has the best relation of cost benefit, and the production is done after that calculation being made. To mitigate this type of increase, we have no other beyond this question of the change of this change or substitution in raw material. But when the price is so relevant as it has been in the question of palm oil, and with the which is very relevant and it continues at a high level now, there's no way to mitigate 100% of this without pricing it into your building into your prices. So leveraging your prices in this process is it can't be substituted. So we don't we hang on to that, use that tool. Also, as we mentioned in the slide at the beginning of the presentation, that there was an increase in the average price in the market and a retraction of average prices in the pasta market. Massas, the principal ingredient is wheat flour. And in cookies, we have wheat flour and the vegetable oils, especially for the fillings of those cookies. Very well. Thank you very much. Thank you, Gustavo and Fabio. Our next question comes from Lucas Ferreira from JP Morgan. Lucas, your microphone is now open. Thank you. Two questions. First, what makes you believe that you don't have any pushback on these prices? What makes you think that this time the price list will be able to be effectivated and complied with, considering that these prices last year, looking at the competitive market and what happened in the third quarter? If I'm not mistaken, you talk about the price of wheat went down, but the exchange rate went up. And so what makes you believe that this time there won't be any more the same effect? And the second question is, if this price increase in the first quarter, is it more to maintain your level of profitability at the levels at which you're operating? Or do you think that it will be an increase that will recompose your margins of some, since some of your margins are below that which you would like to see? Do you see your cost lines? Do you have stocks of 4 or 5 months, depending on the raw material? I imagine that the exchange rate of 620 at the end of the year must have hit your results very strongly. So this increase in prices, are you able to imagine an increase in margins in the first half of the year, as you mentioned in the fourth quarter, or just a recomposition of the profitability to maintain your profitability at a similar level? Hi, Lucas. Good morning. What makes us think this is that this time we didn't come out first. We accompanied the market. We weren't the first ones to jump in and raise prices. We looked at this price increase in 2025. We did market research and we saw that it was a movement not just of MGS but also of our competitors. So there was this change in strategy, as I mentioned back in the beginning. We didn't want to just do a big bang, but we're doing region by region, channel by channel, one channel at a time, in a way that is less linear. Changes the strategy. This first increase in the quarter is, in fact, was to maintain our margins, current margins. We're not looking at we're not looking at increase the margins in this first quarter. What we expect is to see an evolution in, due to the pricing of our price lists, but these changes, which will be done inside the company, whether it be the changes in our manufacturing plants, logistics, SG&A, etc. Looking at these two levers together should bring us to an increase, a sequential increase in the margin of the company, not just a price lever. So that's for sure. Thank you. Thank you.
Nossa próxima
Our
pergunta
next question comes from Tiago Duarte of BTG Pactual. Tiago, your microphone is open. Thank you. Good afternoon, Fabio, Gustavo. I'd like to continue the discussion in the dynamic of revenue, volumes, and prices, and not in costs. The first question, if you could help us to talk a little bit about the dynamic of market share based on the data which you shared. When we look at this data of sellout, sell-in that you shared, when we look at the volumes, the added value that the volume, added volume that you made available in the company, it becomes a little bit surprising the resilience of your market share reported by the company, especially looking at the second half of the year when volumes were smaller, which fell off a little bit more sensibly, more in a more accentuated way. I would like to ask you if this is a matter of a differential between sell in and sell out. Would that be a good news? It would show that at some point the chain will have to restock with your products since the market share is resilient, or if you understand that the sellout is falling off more quickly than those Nielsen numbers suggest with the deceleration of the company. I imagine that this has some relationship. So that's my first question. And the second question, uh, following along this last comment that Gustavo made about the recomposition of prices for the preservation of margins, in recent years, we've seen a lot of the discussions that you've had. Uh, we jumped a little bit in the perception that you had prioritized a little bit more the recovery of margins at some times and a little bit more the recovery of volumes or of market share in other points in time. I would like to know if you could situate us about where we are right now in that process. How happy are you with that market share compared to last year, but to make it possible to have a more accentuated margin these years with all the initiatives that we are here discussing? Or if we should look more at volumes, looking at these discussions in recent years.
Oi, Thiago. Boa tarde. Aqui é o Fábio. Eu vou começar aqui pela
I'm going to start here with your first question.
E realmente houve
There was
você
a
citou duas opções, né?
decided
Na
two
pergunta e foi a
options,
primeira, né?
and it was
Houve
the first.
descasamento
There was a
entre sell-in e
disconnect between
sell-out
sell-in and
em dois
sell-out
momentos
in
do
two
ano
moments
de
during 2024
2024, né? Foram dois eventos. O
for
primeiro
due to two events.
foi no
The
começo do
first
ano,
was at the beginning of the year in January,
da implantação do
in the
SAP,
implementation of the
que
SAP
não houve perda de market
ERP, when
share,
there was no loss in market share at that
mas
moment,
houve sim um
but there
certo
was a certain slower sell-in in the month of
O
January.
sell-in acabou
Why? Because the sell-in wound up happening in the third quarter of 23, when MGS supplied our clients to avoid any type of stock out or lack of products during the month of January. And we were several weeks without making any sales or with a level of sales below that which would normally happen. So at that moment, there was an impact on sell-in, but there was no impact on the sell-out. Another moment was when we, in the month of July, as I showed in the graph of the wheat prices in dollar, which fell, it showed a direction of fall from January 23 to December of 24. But at the same time, at the end of the first half of 24, in which trigo, the price of wheat went up in dollars. And as Gustavo mentioned, we went ahead of the market. The market did not accompany our price, and there was a retraction in our volumes sold to retailers. But the retailers were well stocked with MGS Branco's products, so that didn't have much impact on our market share. So as things started to adjust, improvements in execution and pricing and recomposition of our stocks in retailers, our selling improved, as we saw in the third to the fourth quarter. And we're talking about cookies and pastas, and we didn't really have any important loss of share. So basically, it was two events in 2024, which did cause a change between sell-in and sell-out. Hi, Jaga, but I was going to say good morning, but actually it's good afternoon now. Uh, I'm accompanying the BTG conference here. Are you satisfied in relation to market share? We have another level of market share. We had a level of market share which was higher than that. But we've always been, as you mentioned, at the moment, more challenging moment, we have to protect our profitability and the recomposition of prices. So this market share is close to 30. When we look at the recomposition of margins, a comfortable position without not caring about these details. So our market share has been basically with cookies and pastas is stable and went down in an important way in flours. During the year and analyzing the year as a whole with all of these fluctuations, this price move which we did in June, in ending with a stable market share, I would say that on this question we're satisfied. As far as the dichotomy and the question between, wow, I think you're looking for profit. One time you're looking for profitability, one time you're looking for volume. We do not really have this change in strategy because the market is dynamic, and you make our prices to recover margins, and you have to correct it afterwards to not lose market share. So it's a dynamic process. You have to be accompanying the process, looking at the market. I even played in a recent meeting, the same thing as asking, you, it's impossible to choose. There's no determination of the company's part or by its controllers or by its board to go, oh no, now we're only going to go after margin and forget about market share, or vice versa. We're going to look for market share and increase margin. We don't have this dynamic. This is not our strategy. It's very clear. We're, as Fabio mentioned, growth with profitability. It's not just growth, and it's also not just profitability. It would be good if we were able to have a mandate for look only for one or the other, to be able to look at the internal goals. But it's not like that. These variations in market share and profitability that you've seen over the year due to the market dynamics, it's not a choice or option of the company. Okay, that's very clear. Thank you, Fabio and Gustavo. I can just make one quick question. In the last quarter, when you changed the opening of some information, you were discussing in the discussion about the lowering of volumes, fall in volumes. You said that fall in volumes was in the different categories of the principal products of flowers and adjacencies, that these are all being reasonably similar to the consolidated volume. So have you been able to, would you be able to qualify for us these variations looking at the fourth quarter?
Oi, Thiago. Sim,
All right, Thiago.
gerais, sim.
In general terms,
Tudo na
yes.
mesma direção.
They were all in the same direction. All in the same direction. Okay. Thank you very much.
A sessão de perguntas e
Session of
respostas
questions and answers is now closed.
passar a palavra
We'd like to now
ao
pass the
Gustavo para
microphone
fazer
back
suas
to
considerações
Gustavo
finais.
to make his final comments.
Obrigado por
Thank you all
participar
for
do nosso
participating in our conference. We continue here of the RI team, be at your service. Thank you all and have a good day.
A videoconferência da
The video conference of MGS Branco is now closed. We thank you all for your participation and please have a good day.